Rebels, welcome back to the Rebels Edge. In just a minute, we're going to be with Ryan Mastro. We're going to be looking at 4 stocks that are dumping and a whole big market that's not. Stay tuned. Rebels, welcome back. John, Pete, Mark, they are all flying today. So you got me and you have Ryan Mastro. Ryan, how you doing?
Good. How about you? Great day today in the market, isn't it?
Yeah. Oh, God, I love it. We've been waiting for something like this. All of these low volume days to finally get a day like this is really, really nice. Do you want to just kick it right off with the macro minute?
Sure. Let's jump right into it.
Yeah. Before we got live, we were talking about the Mag 9. Those are the Mag 7 plus a couple of other stocks that are helping us make new highs. For anyone who's not looking, the NASDAQ right now is up 1.68%. It is breaking out. We are, I believe, at all-time highs. Must be. S&P is probably right there, yeah?
Yeah, the only two that are lagging, I think, is IWM, right? That's the IWM and the diamonds, right? Diamonds still have not been able to recover off of the top there. So yeah, the Mag 9 are huge. And I don't know if we have that chart, but that chart to me is just a really good lead-in for what's going on. And what that is just all of these big names that are aggregated together to show you how much of a run these guys have had and why they are leading the market. I mean, to me, this is the catalyst for getting the Qs to the new highs. We did have a little pullback in the semis yesterday, so that kind of gives us a little bit of a hesitation. But when you look at that chart and it's showing you how strong that has been, it is no doubt that, like you just said, we got all these different names. You got Google, a new all-time high. You got Microsoft still lagging, but you had Apple, Amazon, Netflix, all right there at all-time highs. And that's driving the bus here for the broader market when you have those big weights that are basically dragging everything else up and really keeping us pinned to an all-time high. I love being able to see that, because that is if you can say and determine what is the driving force behind the market, that at least gives you confidence, because then you can start to watch that for any kind of type of pullback or turns in terms of what we're going to be watching here over the next couple of days coming off of these highs.
Yeah, exactly. It does create a little bit of a spooky thin structure underneath,
Definitely.
right? And I know that's kind of what you're hinting at. I do want to shout out Amazon, I believe Apple,
Yep.
I believe, what's the other one that's that we have UOA in? Google as well. We have a lot of UOA that's been in a lot of these names that has just been crushing. And, you know, Ryan and I were talking earlier, you don't always see big, unusual options activity paper in these very, very large names. So seeing that and seeing it work out is a beautiful, beautiful thing. Last thing I'll mention from at least my side of Macro Minute is just that we've been seeing really low volume lately. But today we got the CPI. Market is super stoked about it, and you're seeing most of today's volume really be flowing into the NASDAQ. That is just exactly what we're talking about with the Mag 9 here. That's most of where that volume's going, but still seeing that volume go anywhere is great, because last week we had a day where I believe volume on the entire full day session was lower than it was on Black Friday, which closed at 1.
Right.
So
you don't
want to see that.
One other thing I'd add to that, though, is with that narrowing of the amount of stocks that are moving it up in terms of these big names, it's broadening out. But I would also say you got to be careful a little bit here with that breadth that's been down over the past maybe 2 weeks or so. So that's definitely something that I'd start to keep an eye on, because if we see that continued divergence where the Mag 7's driving the market up and then the breadth's really not participating. Now, look, you know, the Mag's going to pull everything up in general. But if that breadth continues to deteriorate, basically the amount of stocks, you know, maybe not making new highs, but maybe dropping below their 50 days or dropping below the 100 or 200 days. So give me that decent measure. Maybe even look at the RSP, which is the equal weight. So if you start to see that continued deterioration, that would give you an idea that maybe we're going to see maybe some kind of a moment here where we get that gut check.
I totally agree. I totally agree. I won't kill the point anymore, but yeah, we talked about the RSP and the market outlook this weekend. Exactly the same thing. Highly recommend taking a look at that ticker. Let's go on to fantastic futures here. My future, though, is still going to be just this Nasdaq, this S&P. The spot where they bounced was perfect for me, particularly if we look at even the QQQ, which is just the Nasdaq but in ETF form. Really broke out of that area, came right back down, retested the top of a gap from about 6 days ago, and then bounced big today. That's exactly the type of simple technical analysis that you can apply in your own trading. And Ryan, I'll pass it over to you if you have anything in the
Yeah, I mean,
futures
the
world.
two I'd be watching right here is, well, obviously Bitcoin, right? So depending how you want to
Mm.
trade it, whether you trade the futures or not, but I mean that is hovering still right around 100,000. So I think that has got to be on your radar, or maybe just the components that make or basically depend on Bitcoin. All your miners, your MicroStrategies coins, all of those are going to be relevant in terms of how that Bitcoin is moving. And also, I'd watch your oil, because I think if we can get any kind of clarity out of the Middle East, I think oil could actually start to roll over, because we have a nice little pop here and some of this anxiety. Maybe we start to get a little that oil roll over here. So maybe you want to be careful in some of those oil plays as well.
I completely agree. Yeah, oil's been hanging out at this really, really important level, crude specifically, that, it has almost always bounced off the weekly chart. If we break below maybe 65, really, really, really doesn't look good. And honestly, a lot of these potential catalysts that could be coming out of the next few months, if we believe that Trump, is going to be able to resolve some of these conflicts, that would be a huge headwind for crude, in my opinion. And now let's get a quick word from Mark Lepresti for our Venture Minute.
Thanks so much, guys. Mark Lepresti here with today's Venture Minute. As many of you know, the proliferation of data centers around the world is causing an energy crisis, one that will be solved by a variety of technologies. But one we're focused on today is called Atom Beam. They use data compaction to make data smaller and the data centers more efficient, up to 4 times more efficient. This company is conducting an equity crowdfunding round that's closing very soon on the 18th of December. We love this one, strongly encourage you to check it out. You can view the company's website and the investment offering at invest.atombeamtech.com. If you want to have a piece of the companies that are going to solve this AI-driven energy crisis that's just on the horizon, check out Atom Beam Technologies.
Thanks so much, Mark. Now on to our 4 stocks, starting with GM. So GM, big news. It's going to cease funding for its Cruise robo-taxi program. It's going to shift focus to its other advanced driver assistance systems for personal vehicles. This follows nearly $10 billion in investments into that robo-taxi business. So that's really the reason why it's down. It's down 1.8% today. That's my take on it. It's with so many other names moving to the upside, it's not where I would look for an upside trade. And I also don't really think that I'd be looking here for my type of downside trading either. But Ryan, I'll pass it over to you. Maybe you have some better insights on
Yeah, I
GM.
mean, I think this has been relatively weak over the past, let's say, 2 weeks or so in general, and today breaking the 50-day, it's relatively weak in terms of the bigger picture. So I'm not really a buyer. Could I be a seller? Yeah, you could talk me into being a seller. You definitely have some support down there around 50, right? So we're trading 51.77. So there's kind of a flat line in there around 50. You have the 100 and 200 down below that. So is it that exciting of a play? Not really, but it's definitely one that I would, if I'm in it long term, I'd probably look to protect myself on the downside if I'm trying to hold on to that stock. So not necessarily one of my ones that I would really like. So I think we move right into Macy's. And again, Macy's has had its own issues here. We've had all kinds of, I know it's Jared's favorite place to shop, but that's all right. I know we were down at and I won't tell the story. Jared, you can jump in if you want to. I won't embarrass you that way. But a problem occurred, and Jared had to go do some shopping over at Macy's. So, but that was maybe the only shopper that day. I'm just joking, but I'm not a fan here in terms of the stock. Obviously, their problems a couple of weeks ago, right, with their earnings, they had an employee hide $150 million worth of expenses. So clearly that is a problem where they have to probably do a little restating. And I think there was some other clarification that was going on today, but the stock has dropped pretty significantly. We dropped from let's call it a little under 17, 16 and change. We got down to about 14 something in terms of the low today, but it was a big gap down on the news. 1463 was the low, but we managed to rally it all the way back up. So if you are a believer in retail and believer that the consumer is strong and going to continue to stay strong, Macy's may be a little bit of a discount right now. Personally, I think retail going into Christmas, we're probably going to have a relatively in-line type of Christmas retail season. The problem is going to be after that. I think a lot of people put a lot of money on credit cards. And even if the Fed does drop their rates next week, I don't think it's really going to help, because there's no reason for the credit card companies to reduce their numbers, right? They're keeping them up here because they have risk, because these guys are starting to default in a larger component. So I am fine with Macy's here in terms of maybe a longer term play if you think there's going to be a recovery, but bigger picture, I'm not really a big buyer here. How about you?
Yeah. Oh man, a few things. So yeah, probably are going to cut rates. Probably not going to matter for
Right.
Macy's. They are responding a little bit to that 1450 flat line, which is just an area that they've been seeing support since like August. That's okay, but you had mentioned, hey, if you're a big retail bull, then maybe you like Macy's here. I think if you're a big retail bull, you probably look at the stuff that's actually doing well, right? Like
Yeah, I agree.
which Lulu, Ulta are just stocks that came
On
out with their
fire.
earnings and slaughtered. Gap doing good for some reason. I don't know who goes to Gap, but clearly a lot of people are. So I would think you maybe be looking for names like that if you were gonna try and chase the retail stuff. Next, we're gonna talk about play. This is Dave and Buster's. Anecdotally, I had heard a news story that they were going to begin allowing people to gamble on the arcade games with one another, which sounds awesome. But apparently, it is not bringing in the money to Dave and Buster's, because they reported a loss of 45 cents per share. They missed estimates by 12 cents, so that's a huge amount percentage wise. Their revenue also fell 453 mil versus 469 mil. So that's a double loss. Comparable store sales declined 7.7%, and their CEO resigned, throwing in the towel. He says, "That's enough for me. We're gonna move on to brighter horizons." So yet another name. I have not gotten to look at the chart in play, so I can't say whether I would want to be short or long this, but it's not an inspiring story.
Well, I would say I agree 100%. And the CEO leaving is never going to give you a vote of confidence, or at least from his side of it. So whether he was good or bad, the market's kind of saying that, given that obviously they may have liked him at least enough to say that it's bad that he's leaving. And clearly the numbers don't match up. This is the first negative print we've had in a long time. I'm looking back at the chart. That's probably going back into 2021, where we've had a negative print. Maybe not necessarily against the guidance, but a negative print here. So is not a good thing for the company. So the problem I see on the chart, bigger picture, is that you are at a pretty critical area right now. So I would say 30. I see a kind of a swing low here off of the last earnings on 9/9, which puts you somewhere around 29.31. That would probably be my catalyst to actually take a bet to the downside, because when you look at it in terms of the bigger picture, this does not look pretty. We've been in a long time consolidation. We had a great run back in early 2024, but it's just been pretty ugly since. So you're down through all your moving averages. You're hitting basically critical areas. So the combination of earnings and maybe the CEO leaving is that lack of confidence that it needs to push it down lower. So I would probably be a bigger bear if we break down below that. Let's call it 30 to 29.30 was that swing low area. So that to me could be a play to the downside. Targets, bigger picture, probably down in the low 20s to the high teens. So it could get pretty ugly pretty quick.
Yeah, and if we wanted to take those targets even closer, I am looking at that now. Yeah, that's a huge area. Oh my God, all the way back to 2021, all
Yep.
of these
Yep.
swings between, call it 32 and 30.50, with that one swing low that already kind of teased below. Yeah, I mean, you could probably look at maybe taking a roll with something like 24, 23.98 is a pretty decent little bottom of a channel there. But yeah, I mean, even down to 16.45, this doesn't really look great. Completely agree. Yeah, definitely a better downside target. And I think that's an important lesson too. the more times you keep slamming into an area of support, especially when you just got there off of a massive 16% gap down, it's not always going to act as support. That's going to probably turn into resistance if buyers start to give up and if sellers are more aggressive. So excellent,
Agree
excellent point there.
100%. Yep.
And then the last one that we're going to talk about today is Hershey's. They had popped, I believe, yesterday because there was a rumor that maybe Mondelez was going to buy them out, or maybe it was 2 days ago that they had made this big 10% pop. Kind of faded some of that yesterday, came in today, and it looks like Mondelez is not going to do that. So they're committed, Mondelez is, to bolt-on mergers and acquisitions, not whole businesses that already have a massive brand for themselves. I think that's really the whole crux of the story with Hershey's for me.
Yeah, I mean, I think the problem with Hershey's is we had an incredible run back in 2023, right? This thing got to 276. We had a big drop down into the end of 2023 where it fell to about 200, basically range bound. And then basically in the last month and a half, we've been kind of in this area where it just feels a little heavy. So I think that news of Mondelez coming in and being a potential, buyer or trying to acquire, Hershey's gave it that pop, which is great. I'm sure some guys said, "Oh, thank you very much. I'm going to sell this thing." And it just basically faded right back down. So you look at that. I think this could also be another bearish play. Again, I'm not seeing really any big positives here in the sense that if the stock was weak going into this news, into this rumor, and the rumor helped prop it up, I think they're going to probably resume trend to the downside in terms of the bigger picture. So this one, I'd also probably lean a little bearish. I'd say I'd probably want to enter somewhere around under 170 if I think it's going to continue to fall here. So I think you got a little bit of room here. Maybe, again, let this thing breathe a little bit, but I don't want to be holding chocolate in my pocket and have it melt. So that would be one where I'd probably say I'm going to lighten the load here if I'm bullish, and then look to probably even be bearish if it drops.
Cut the whole load off if you're bullish on Hershey's. I wouldn't just be lightening it. I'd be opening up the tailgate and let it all roll out. One thing just about mergers, acquisitions, and all that I had forgot to mention, the only reason that I can see that you might want to be bullish on Macy's, for me personally, and the only thing that gets me excited when I see you away in Macy's is specifically exactly that. We've been getting teased about all these activist investors, and we hear about this possibly positive regulatory environment coming up over the next 4 years. That's an area where I would be maybe looking at, honestly, just very large paper, because technicals aren't going to really tell us a lot about who's planning to buy them out. That would be perhaps one reason why one might consider being long Macy's.
From a Macy's perspective, yeah. Look, I mean, they have their real estate portfolio is really where the money's at in terms of the bigger picture. Yeah. So, I mean, their model has been working, I'd say, in the medium term here, but clearly there's a lot of structure they have to overcome in terms of competing with like an Amazon, right? In terms of that. And the other positive may be that, maybe you're not in competition with the Nordstrom. They're trying to take that one private. So that could be interesting in terms of, you take a big box store, right? And take that off the table here. Maybe that is something where then Macy's gets a little bit more of the limelight in terms of better numbers, and you can see something consolidate there. So, I mean, look, I have no problem in the longer term aspect for that, but is there more exciting stocks out there? Yes. Right. I mean, if you're going to look at something that's moving, let's jump into some things that are moving, like jump into those Mag 9 names that are making all-time highs and looking really strong.
Yeah, completely agree. Or even those quantum names that are really starting to pop.
Definitely.
But I won't drag this out any longer than it has to be. Thank you guys so much for joining and for watching another great episode of the Rebel's Edge. I'm so sorry that we couldn't have John and Pete on here, but I know they'll be back very soon along with Mark. And I hope that you guys all have an incredible rest of your day.
Thanks, guys.